Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for August 12th, 2018. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio at 0.96 fell slightly from 1.04 last week. The total count of securities in bullish or bearish patterns increased 2% to 2,913. The count of bearish stocks increased 6%, while the count of stocks in bullish patterns decreased 2%. The Pirls PNF market breadth summary chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the OpenOffice calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 19 points for the 7th decline in 9 weeks. At a positive 11.70 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues above all 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on higher average daily volume. Momentum. The CCI 20 daily, at positive 33.27, is above positive 21 last week, having risen then fallen back below plus 50, continuing in a Woody's uptrend. The CCI 20 daily is now within the plus or minus 50 range for a zero-line reject long entry signal if the CCI 20 daily rises early next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 119 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly rose to a positive 101.58 from a positive 83.68 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: S&P Retail, Sumtech, and REITs on top. Gold and silver, oil, oil services, and Sumtech on the bottom. Bullish, REITs continues in the top 5. S&P Retail, Comptech, and Networkers have entered the top 5. Gold and silver continues in and now leads the bottom 5. Oil and oil services have entered the bottom 5. Computer hardware, brokers, and networkers have left the bottom 5. Bearish, disk drives continues in the bottom 5. Focus this week from www.theautomaticearth.com. Going cold turkey. Who is going to be buying lira Monday morning? The following are some key points. In 1997, the Turkish courts saw Erdogan as a threat to the secular Turkish state as defined by Kemal Ataturk, the founder of modern Turkey, in the 1920s. Erdogan is trying to both turn the nation toward Islam and at the same time not appearing to insult Ataturk. The reality is that many Turks today lean toward a religion-based society and no longer understand why Ataturk insisted on a secular state, which he did after many years of wars and conflicts as a result of religious and other struggles. Seeing how Turkey lies in the middle between Christian Europe and the Muslim world, it is not difficult to fathom why the father of the country saw secularism as the best, if not only, option. But that was 90 years ago. In 2014, Erdogan finally got his dream job, president. Fast forward to the past week. Donald Trump imposed tariffs on Turkey, ostensibly because Erdogan refuses to free an American pastor. The result was a God Almighty drop in the Turkish lira. Analysts at Goldman Sachs said if it reached 7-1 versus the USD, it would be game over for Turkish banks. It got to 6.8-1 before falling back to 6.4-1. And without support from China or the IMF, it would indeed appear the game's up. If foreign buyers of Turkish debt go on strike, or if Turkey is unable to roll over near-term maturities, watch how quickly the currency crisis transforms into a broad economic collapse. This next graph from the IIF shows how much debt Turkey has and in which sectors. Not much household debt, which is positive, but a monster non-financial corporate debt, which is definitely not. Note, Hungary is number 2 on this one, but look at the graph above and you see that while Turkey has a current account deficit and rising external debt, Hungary has a current account surplus and falling external debt. Don't do the apples and oranges thing. Also note that Argentina's debt is almost all government bonds. Along that same line, I saw Tom Luongo today compare Turkey anno now to Russia in 2014-15, but Moscow's USD and Euro debt is about 25%, while Turkey's is at 70%. It's a very bad comparison. Russia has had sanctions for ages, and it's had plenty of time to adapt its economy to them. They have to hold some USD and treasuries, but they're largely fine. Turkey is not. But this is easy stuff. We know all this, or we could have. Turkey has been splurging on debt at least ever since Erdogan became PM 15 years ago. What Erdogan needs is someone to blame for his collapsing economy. And also, if he can get it, a bailout from somewhere, anywhere. Problem with the bailout thing is, no matter what option might be available, and it's only might be, he will be forced to relinquish a lot of the central control he's carefully built up through constitution amendments, etc. His maybe options are the IMF, Russia, and China. The IMF equals America. Russia might want to assist, if only to get Turkey away from NATO. But Putin hasn't forgotten Erdogan shooting down a Russian jet fighter in 2015. China sees things differently. It's easier and much cheaper to buy up Greek assets for that same purpose. Thing is, to prevent the latest escalation, all Erdogan would have had to do was release an American pastor. The fact that he didn't is perhaps more telling than anything in all this. He's looking for someone, some country, some organization perhaps, to present as an enemy to the Turkish people. Recep Tayyip, that is Erdogan, has long seen this coming. His economy is collapsing, his currency is collapsing, so he'll focus on what's left. Turkey's strategic position on the map, its NATO membership, the negotiations for EU membership, and, most of all, the support of the Muslim contingent in Turkey that solidifies his power. And don't let's forget that Turkey presently hosts millions of Syrian refugees. Erdogan can just buy a bunch of dinghies, he can still afford that, and cause absolute chaos in Greece and the EU. Who's going to be buying liras on Monday? Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.